Hello and welcome to Indianomics. I'm Lata Venkatesh. Aside from the US Fed, the big worry for the Reserve Bank and the Monetary Policy Committee in the upcoming policy may be food prices. Look at the April to August reading of cereals prices. This is worrying because for the past 4 years, cereals have not been a worry at all. Look at the chart showing cereals inflation from 2020 onwards. It has spiked only this year, April to August. And this spike in cereals has led to an overall spike in food CPI this year. Look at the graph. It's much higher in the month of August than in the current year than it was a year ago. What's worse is global food prices have been rising sharply in the last 2 years. Look at the index put out by the United Nations Food and Agricultural Organization, or FAO. But fortunately, the FAO index has been declining in the last 3 months. That is, from June onwards, it looks like the worst is over, looking at the global index. But is the worst over, or will Indian cereal prices remain elevated? Should we worry about food CPI? Let us ask two experts, Dr. Ashok Gulati, Infosys Chair Professor at the Indian Council for Research on International Economic Relations, ICRIER, and Dr. Ramesh Chand, member of the NITI AAYOG, both among the best agriculture economists in the country, or maybe even in the world. Thank you very much, gentlemen, for joining us. Dr. Chand, let me start with you. This August spike in both cereals and food inflation was a bit worrisome. Is it over, the hump over? How do the prospects look for September and beyond?
You see, there is a shortfall of 4% in area under rice compared to what was the area sown under rice last year. But rice is one crop where we have highest surplus. Our production last year was 130 million ton, and we require around 108, 110 million ton for production. So because of the shortfall in area and also because of delayed sowing, if there is some shortfall in yield, the maximum range of production loss will be somewhere between 6 to 10 million tons. So even if we factor in that, India will have more than 10 million ton rice surplus from the current year's production. So I feel that there is no worry as far as food requirement in the country is concerned. But inflation can happen despite normal production, even despite above normal production, because of several reasons. As you know, that we are a large surplus. That is one reason that our prices are integrated with international prices. Therefore, some influence of international prices has to be there on the domestic prices. But one big factor which is affecting food inflation across the world in India and elsewhere is the prices of agrochemical, prices of fertilizer, prices of insecticide, prices of pesticides, which are related to energy prices also to some extent. If you look at prices of P, prices of K, phosphatic and potassic fertilizers, they have skyrocketed. Government of India has absorbed the increase in prices of urea. But as far as increase in potassic and phosphatic fertilizer and other agrochemical are concerned, so you will just find that that will get transmitted into the cost of production and therefore on a supply side. So this is something which is adding to the normal rate of increase in prices. And you know that MSP of most of the crops, government announced 4 to 6% increase. Then this extra increase in cost of production, which is unexpected, that is also contributing. Plus this third factor that our domestic market is not insulated, even though we declared a ban on broken rice, regulating export through export duty. But still, you know that export will happen. Already, I think more than 7 million ton of rice has been exported out of country. So these are the factors which are contributing to food inflation. But I feel that we should look at our track record on food inflation after looking at what is happening to global food prices, what is happening to prices in other countries. You have shown the FAO price index, that how that index is there, how those prices are increasing.
Okay.
In fact, Lataji, we were expecting price inflation to cool down in the month of September. And on 10th September, suddenly, when news of poor harvest of corn, poor harvest of soybean, harvest of so many grains came from USA, prices in international market, if you look at data on 9th, 10th, 11th September, it just shot up by 5 to 8%. And that is what got transmitted to our domestic prices also. And that is the reason that this inflation is becoming a cause of worry. But whatever measure need to be taken, as you are seeing, that government is not leaving any stone unturned to see to it that that we need to ensure that food prices remain affordable for consumers.
I take your point. That's what Dr. Gulati started with, that the government has been able to provide a kind of a net, at least for the lowest classes. But Dr. Gulati, I hope you could hear Dr. Chand. We had a slight problem with your line. The factors that Dr. Chand mentioned, fertilizer prices being skyrocketing, are they already in the price, or can they continue to keep food inflation high in the country, cereals inflation high?
Yeah, the issue of fertilizer pricing, especially urea price has not been increased for the farmers. It has been absorbed in the subsidy by the government. Some others have increased a little bit. So I don't think it's a major factor behind Indian cereal prices going up. Yes, expectations play a very important role, and that's where situation is that in case of wheat, our stocks had been depleting very fast. And in case of rice, if we continue with free food, 10 kilograms per person, then even the existing stocks will deplete. And that plays a bit of role in this. And the monsoon being somewhat not very even, that has created a situation where the expectations that the coming crop may not be very good. And therefore, there is a price pressure. So all these factors combined, you are worried about cereal prices, but if you look at the contribution to CPI inflation in August, the highest contribution is coming from kerosene. The PDS kerosene, 87% increase, and given the weight of it and all that, followed by milk. And then you have vegetables. Vegetables is a worry on which you don't have much of control. Yes. They are very volatile. So you have to go beyond cereals to understand the structure of CPI inflation and what you can do and what you can't really do.
I was coming to the other questions, sir. I was coming to vegetables in just a minute. But before that, do you think that the high cereal inflation, and as you say, inflation expectation because of the news from abroad, or because of what Dr. Chand said, expectations that subpar monsoon in some regions can impact the Rabi crop. Because of that, do you think there can be second round inflation on animal feed, and because of animal feed on milk, and because of milk and maybe atta and maida, can it also impact packaged food? So do you expect second round inflation?
Yes, sure, of course. But you said Rabi inflation or Rabi crop may be adversely impacted. In fact, you have all the reservoirs at a pretty good, comfortable storage capacity of water. So Rabi, we will be expecting a better crop despite a somewhat lower crop in Kharif. So on the whole, it will even out on that front. But yes, cereal prices and especially soybean side, if we include the part of the oil meal, because that impacts your livestock feed prices. it's corn and soya basically that go in a much bigger way towards the livestock sector. And if they are under pressure, then of course you will have higher livestock products inflation and prepared meals inflation. So that will be under pressure.
Okay. Well, Dr. Chand, similar question to you. You think there is still some more second round to come? And you also alluded to fertilizer. Is it absorbed, the non-urea fertilizers, or can there be further increases?
No, non-urea, only DAP to some extent is absorbed. Other kind of potassic and phosphatic fertilizer, they are part of nutrient-based subsidy, so not fully absorbed, and their prices have really gone very, very high. But your question relating to second round of inflation, I think you also mentioned about feed, but I would say that we have some good news on front of crops, which are main source of livestock feed. Both soybean as well as maize. You just find that maize area, core cereal area is much higher than what it was last year. So I feel that as far as feed is concerned, the prices may not go very high. Also, internationally, also you just find that prices of oil meals are softening. They are not behaving like cereals. But coming to the second round mean after Kharif, when it comes to Rabi, several factors are important. But the point which Professor Gulati mentioned, that the level of reservoir is 18% higher than what is the average of last 10 years. And also, according to some meteorologists, some La Nina phenomena. So we can expect good rainfall in the month of October and November, which occurs very well for Rabi sowing. So I do not see this second round of inflation making inflation more severe or putting us into a inflation or high inflation spiral. I do not see that kind of situation arising in case of India.
Okay, on that cautiously optimistic note, I'm going into a break, coming back in a minute for more on what the global trends are and how things can shape up on the whole in the headline inflation front. Back in a minute. Welcome back. I've been speaking to two eminent agricultural economists, Dr. Ashok Gulati and Dr. Ramesh Chand, on the state of food inflation in the country, especially after the August numbers indicated a sharp spike in both cereal inflation and in food inflation in general. Dr. Gulati and Dr. Chand, thank you very much for your patience. Dr. Gulati, let me come to the global scene. There was an allusion to the fact that in September, mid-September, we saw the prices of corn, etc., rise. Do you think this can continue to be a negative impact, or should we take encouragement from the fact that after a high level, we actually have seen the FAO index fall in June, July, and August?
Let's start with the better news globally. Initially, because of the conflict between Russia and Ukraine, almost 50 million tons of wheat, corn, all these cereals were literally, there were supply bottlenecks. And now, whatever the agreement has been reached, the news is that those shipments are on its way to the global markets. So that is going to, in a way, improve the supplies, pressure on supplies. Second thing is the climate change that is happening. We haven't talked about that more globally, the heat wave in Europe and even US. But in Russia, it's going to be a bumper crop. So we have to still wait and watch overall global supplies, how they will be impacted. But the story is mixed. And on top of that, globally, you also talk about the likely recession that is being discussed right now in Europe and US, then the demand will also get compressed somewhat. So there is a better news on certain fronts, and there is not very good news on some other fronts. My feeling is the worst is perhaps behind us, and no matter this little blips up and down, we are likely to be in a much better situation in the months to come. But still, we will not be able to bring it down to below 6% or 5% or 4% as RBI perhaps.
Yes.
I would expect the CPI general index remaining around 7% and food inflation a tad higher. Maybe about 7.5%, 8% on that front. So that's what my assessment of the global and the domestic factors would be.
Okay, so that's not looking very good, but as you say, there are at least some positive factors in terms of probably recession cooling down. Dr. Chand, this is going to be a little difficult, this question. What we were picking up from the market is that vegetable prices also can continue to remain high, perhaps up until December, because of the late rains and the monsoon taking a longer time to withdraw than was originally expected. So there is talk of tomato prices rising. What can you enlighten us about the immediate impact on vegetables?
I think this retreating of monsoon is happening. That is the news from meteorology department. It is happening this week, and I do not expect this withdrawal of monsoon to get prolonged. And vegetable, which of course are highly sensitive to excess rainfall or shortage of rainfall, I feel that season is over. And some sort of stability will appear in case of vegetable prices. Already we are seeing it in the case of onion. I expect that this will be followed by potato, and then in the case of tomato. Yes, there is setback to area. This is the news that overall area under these three crop is less. But other than area, the more kind of impact of monsoon on vegetable prices come from harvest. Which is affected by any slight aberration in monsoon. So to my mind, the active or full phase of southwest monsoon is over. We are in for a more stable moisture regime. I do not expect any serious weather event which is likely to put a very high adverse effect on vegetables. So that is on vegetable front. Okay. If you permit,
yes, please go ahead, sir.
Yeah. You also mentioned about international factors, which of course are very, very important. I feel that at the core of all those factors, what happened to energy prices? Whether it is Ukraine-Russia crisis, how it folds. Yes, whatever beat comes from Russia, Ukraine, that also affects. But to my mind, that is a secondary factor. The primary factor is what is the price of natural gas, how the supply of crude. One day news may come that Russia is going to flood Asia with crude. So it may be very good news for Asia, and it may be very good news for energy prices, because if energy prices are low, even diversion of food for feedstock, for biofuel, goes down considerably. Okay. So I feel that energy is the core factor which is affecting, and Russia-Ukraine frontier, this news which has maximum impact on energy and its transmission in various ways on food prices.
Okay, so very quickly, Dr. Chand, you would agree with Dr. Gulati's assessment that we are still likely to be around 7% in terms of inflation, and a little higher for food?
it is difficult to disagree with Dr. Gulati, but I would like to make one suggestion through your channel, which can have some cooling effect on prices, especially cereal prices.
Okay.
I feel the government should not extend Pradhan Mantri Garib Kalyan Yojana beyond 30th September. The need to check inflation is now stronger than the need to give extra quantity under PDS to 80 crore people. Now we don't have COVID-like situation. Its effect is also no more there. Economy is back on rail. Employment is back to the normal level. So I don't see any justification for extra 4-5 million ton of grain every month through Pradhan Mantri Garib Kalyan Yojana.
Okay.
So I think that is very important instrument which can be used to bring inflation in food, either to keep around 7 or to even take it below 7.
Yeah, I take your point. I mean, there would be an inflation expectation angle to it. Dr. Gulati, out of time, but you want to react to it?
Yes, of course. I have written on this that even the last extension was literally a reward for the political outcome in some states. It was not COVID related, so to say. And this is the high time. Otherwise, you are building too much of fiscal deficit, and that will impact from the other side. And what you see in the cereal is the non-PDS cereal part. And if you have your stocks, which you can unload in the open market, you can tame inflation. So that generosity that you showed during COVID period, which was very much needed, and you had surplus stocks, I think we have to get to the normal times without...
Fair point, sir. Thank you very much, Dr. Gulati and Dr. Chand, for enlightening us with your 360-degree perspective. We started off discussing monetary policy, but there is a word of advice to fiscal policy as well, to discontinue the extra larges given during COVID, because the fall in stocks can have an inflation expectations impact on prices, non-PDS prices in the market. But otherwise, there is still some bouts of worry. The Rabi itself is not a worry, but international prices, because of the heat wave and because of geopolitical twists and turns, can be a question mark. And Dr. Gulati believes that a headline CPI of 7% could be persistent. Not very good news for the Monetary Policy Committee. Wrap up on this special show. Thank you for watching.